So are investors more willing to go into equity ETFs?
We're definitely seeing that. I think what we saw in the month of October, as you point out, is that investors took $10 billion of net money out of ETFs providing exposure to U.S. markets. And in the month of November, $9 billion went back in. So what we found was investors in October were very concerned about who was going to win the election. The Hurricane Sandy was announced it was coming towards the U.S. on October 20th. And also, I think, the fiscal cliff. And so we clearly have certainty as to elections and what the impact of Hurricane Sandy was. And I think many investors expect that we will muddle our way through the fiscal cliff and therefore are feeling more comfortable that they want to go back into the U.S. market.
Okay, let's say we get over the fiscal cliff, then what do you see for next year in terms of U.S. equity ETFs?
Well, I do believe that many investors, when they look around the world, see the U.S. as being a place they want to have money. We still have the concerns about the various Eurozone countries and what's going to happen. I think many investors see that the U.S. actually has many things going right for it, and the fiscal cliff was kind of the thing hanging out there. So I believe that many investors will invest in broad U.S. benchmarks, but will also go back to investing in sectors. So based on what segment of the market they expect to be doing well, we've historically seen both retail and institutional investors use sector ETFs for U.S. exposure to be able to tilt their portfolios towards areas they feel will do better.
Well, any particular sectors?
Well, I think many people feel that with Obama having won, that healthcare will do better. They do believe that we'll also see probably utilities, some of the events that happened during Hurricane Sandy in terms of the rebuilding that has to take place will probably benefit, and therefore ETFs are an easy way to implement that tilt towards those sectors of the market.
Do you see any action going back towards emerging market ETFs? Because at this point, we saw assets flowing to North American ETFs 50% more so than emerging markets, which had been a hot area.
Well, you know, that's an interesting point, because it does seem like relatively emerging markets didn't get much money, but they got significantly more money this year than they did a year ago. So we are seeing investors putting money back into emerging markets. Many are viewing the fact that you do need to have a diversified view of investing, and so clearly having some money in developed as well as in emerging markets is something that we're seeing increasingly being embraced by many investors.